What's going on, traders? Hope everybody had a great weekend. Wanted to go through a recap here and a quick video doing some analysis of the S&P 500. And of course, before we get into it, this video is for educational and entertainment purposes only, and in no way should be viewed as financial advice. So with that out of the way, let's get into talking about the market here. And oh my God, you know what? What a week we have in front of us here. We've got quite the jam-packed week filled with economic data. We're going to get into the calendar here to start things off. So what do we have this week? We're going to take a look at the calendar here, a part of Market Watch, and Monday we have a nothing on the docket, but I still am expecting some kind of choppy price action, as we're going to be probably seeing a lot of anticipation ahead of what we have coming up on Tuesday at 8:30. We have CPI, okay, and then after that, Wednesday, it doesn't stop. We have PPI at 8:30, and then we have FOMC at 2 o'clock, and Powell speaking at 2:30. And if you still wanted a little bit more, we do have initial jobless claims at 8:30 on a Thursday, the 14th. So just a completely jam-packed week here of critical data that the market is going to want to assess and may have some big reactions to. So this is a very important warning. Maybe get out of the way early, one trade in the morning, take the rest of the time, the day off, or just watch the market. You don't have to be in a trade. It can be a lot of volatility, through, of course, FOMC and CPI. So just be extra careful this week. You can do a lot of damage, and we really we want to just be very cognizant and have our risk management front and center. All right, so with that out of the way, let's get into some of the charts here and what can we take away from these perspectives. Let me close down my browser here. Of course, everything. Okay, there we go. All right, so what can we take away from the weekly chart? Oh, I'm sorry, we're on the daily here, so let's switch over to the weekly. That's what I meant to be in. Okay, so we have now pushed up here, and let me actually zoom in a little bit. Okay, so we're still hanging out kind of in this critical area, and right now, we're going to just watch, and we're just going to do this, from a candlestick perspective, and then we'll kind of go into a different review really quickly. But just breaking it down by the candlestick perspective, what can we take away? Now, the main thing is, we did slightly make a higher high here, right? We're just trying to get over the week of what is this, July 24th. Trying to get over that high, but just barely. Really not a convincing move. I mean, we can kind of make that a bit of a zone, right? From the week of the 31st, we can kind of from that body to here. So we're kind of pushing out over that, but it's still, the momentum is slowing down a little bit. You can see the size of the candle starting to definitely get smaller. And, this week's going to be very tricky, and hard to make any kind of predictions one way or the other how the market's going to react to the data, whatever that may be. But with that being said, I'm not too convinced on this breakout yet, personally, right? Well, and there's no, as we were talking about earlier, we're not talking about the market crashing or anything like that. We're still just waiting to see if we get a possible weekly or a daily lower high to be put in here in the trend sequence. And we kind of went over a lot of the videos that a lot of the levels that we were watching in the video last week, because really overall nothing has changed from these bigger picture perspectives, right? So we're looking at the top of this double inside bar here, right around that 451, 50, maybe 451. So that was one key area that we wanted to keep an eye on, right here, right? And then we're also watching the lower range of that double inside bar breakout, right? Or yeah, so those are the two areas that we still are going to be watching for potential higher lows to be put in and then to propel us up higher. But again, it's such a data jam-packed week that we don't know. But we're gonna watch and see. And what I'm liking, at least from here on this 3-year weekly perspective, is you see where point of control is right now, right at this key area here, at the bottom of the double inside bar that caused that breakdown, that we experienced in August and September and some of October. So would it make sense potentially for the market to seek this liquidity down here? Yeah, I mean, that could potentially happen. So I think that that's something interesting to keep an eye on. Now, we don't have any overbought signals from our Momo right now. So that is all well and good on the weekly, from the weekly perspective, but I will say we are kind of getting outside of value here on the volume profile. So want to keep an eye on that for sure to see, and of course we have seen it come outside of that value area. But market generally doesn't like to hang out there too long, and usually reverts back into the areas of more liquidity. So we'll see. It's just something I like to keep an eye on. But either way. And as we went over last week as well. Really, what's the major area that the bulls need to hold? We could sell all the way down to 432 and totally be fine. And I don't suspect that we get down there, but just as a frame of reference, and we went over that we went over this last week. It's kind of holding this. This area here where we had the breakdown right from earlier in the year, right? We had our M pattern there, double top, whatever you want to call it, and then that's where we broke down. So that's the major structure shift that we're going to watch. But either way, I don't think we're going to get down there, but we just still want to keep that in mind, just for whatever, just to have it right there in the back of our perspectives there. Either way, the volume point of control here, which is pretty much around 442. So I'm going to keep an eye on that level in this area here, 442, 443, if we do in fact ever do see any sells down into that area, right? So let's see what happens there. Let's go into our daily time frame really quickly and see what we can take away from this perspective. Now, let's zoom in a little bit. Okay. Now, we've been talking about kind of this balance range, right? And we again, I don't want to be too redundant because, not that much has happened overall. But we were talking about, this balance range, right, that we've been trading in. And you can see here from this daily perspective, we have started to break out of that range. So let's see if they can actually hold this. One possible scenario is something that we want to still watch for, and I was talking about this in last week's video as well. If we do push out of this like how we are, but then we fail back down and we move back down into the balance range. Well, if that happens, well, this would be a failed breakout, and in which case, if something like that happens, it is very likely to see sells back into the lower part of balance again. So I'm going to keep an eye on that, and that level here kind of for the top part of this balance range breakout, we're going to call it, we're going to come up here, but it's actually the high I'm going to do from the fourth, which is going to be 459.12. So we'll just call it 459.15 to 459. Holding over that, I think that would be good. But if we do start to see a half-hour close, maybe even an hourly close underneath back end, we can kind of look for that potential move back down to the bottom part of the balance range, and that would take us down around, we'll say 454 thereabouts. So that could be a decent move. But we do want to pay attention here. We do have the daily 9 EMA sitting at at 250. What is this? 456.60 there. So want to keep an eye. We might only sell down halfway into the balance there in our half gap, and then potentially we might make a move. But if we do start to break below, I would say it would be likely that we would trade down to the bottom part. So we want to watch for that potential fake breakout here if that starts to develop. But let me just go back though into another view when we were looking at some of these bigger supply areas that we had up above, right? And this is kind of the major one, anywhere from that, we can call it 459.65 all the way up to 462. 462.10, anywhere in that area. So all this this zone here right above, there's a lot of supply liquidity up here. So will the data potentially be the thing to push us up and finally break us back over? If that happens, we'll be looking at 465, 465, 466, 25 thereabouts. That would be my next upside targets on the market. Like as I was saying earlier, if we just break above this and we fail down, we'll look to see what happens if we break under this 456.40 thereabouts, or that 9. And then we'll look for that bottom of the range again here, which I already have marked off pretty much, 453.75. We've got a little bit wicks under, so it can be 453 as well. Now, what would happen if we did break under that? Well, same thing. We're already talking about. We would look for the highs, retesting the highs of this bull flag breakout right here. So that would be probably coming down into the 451.45 area. And if we started to break below that, we would look towards the bottom part of the bull flag breakout. That's going to take us down around 448.80 thereabouts, right? And under that, we'll be looking for the start of the gap, 446.25 thereabouts. So there's some bigger areas that we want to be cognizant of coming in, and especially, if we do get some interesting reactions from FOMC and CPI, well, then we might have, the potential to have a really wide range in the market. But I don't really expect much for Monday. And again, as I said, I'll probably say this at least 3 more times. Be very, very careful this week with your sizing and the potential volatility, because just as much as we all want to think, oh well, we can make a lot of money, our main focus should be, well, how much money could we lose, right? So all right, the other thing here is we look at the daily before we start to move on. Right here we were showing that slowing down in the momentum, coming off these extreme overbought conditions, cooling off a little bit, but a little slight uptick again in momentum that we were talking about that could happen. We could stay in there and it can kind of flip back and forth. We'll see, but there it is. Okay. Let's move it along. Okay. Let's continue. And let's take a look at our weekly trends here. Okay, we're on the daily chart, but that is fine. Let's just flip over really quickly. Okay, so we're going to take a look at these weekly trends, see where we are here. All right, so we finally did make it into this next big area of potential confluence on this downtrend. And again, it's so tricky, coming into CPI and all the data here, but you can see all the reactions that we've had in this area before. Got stuffed here twice. Okay, so this is a major weekly trend line. You can see right here as well. Here's a little fake break action, right? So we've had multiple reactions. Even here you can say, they tried to break over but couldn't break over. So you could say here as well, where we've tried to break over, traded in this area, could not do it. So want to be very cognizant as we come into this area again. For me, and risk reward is not very good here, especially on a kind of a very mild higher high. I mean, we did put in a weekly higher high from what we had last week. Last week's high was 459.65. This week's high was 460.75. So we did make kind of like a poor higher high, you know, kind of a weak higher high, if you will. But yeah, so you know, nothing really is screaming, you know, bearish per se, but we want to just look at all the different angles. And again, like I said, we could afford a pullback easily, you know, and totally be fine to keep on continuing this move to the upside, right? So, all right, let's move it along here. I don't think there's too much really to go over from the fib. How did these things get on here? Okay, let's just keep this on the daily. This is not the weekly one, but it's pretty much the same swing high anyway. Okay, so, you know, we, again, kind of went over this next week. Even if we pull back, we'll see this nice confluence with this trend line. Do we end up actually setting up and giving us some type of an ascending triangle situation, and then we make the breakout truly over the equal highs? I'm not sure, but this is one path that we could take. So let's watch for that little ascending triangle potentiality, and then we build up that pressure there into the apex, and then boom. So we will watch that as well. But you know, really, as long as we stay over the 23.6, there's really, you know, not even anything I can say to be even that, you know, concerned with. And sure, like I said, you know, that's the start of the CPI gap, right? I believe this was CPI that did this. So, you know, there's plenty of room. I mean, we could even stop just at that high of the bull flag, as we kind of went over on the other chart. Okay, so let's just keep it moving right along here. What else do we want to pay attention to from the bigger picture perspectives? Well, let's go into our daily trended channel. We haven't looked over this one in a while. Really not too much here to kind of go over, other than we are kind of breaking out of, you know, this high here. And it's kind of the same song and dance where we just want to see if there's any potential false breakouts. But from this viewpoint, with 458.30, I don't want to see that hold up, and that's going to be the high from what is this, November 28th. So keep a little eye on that level as well. Okay, so let's keep it trucking along here. I don't think I have anything else to go over from the bigger picture perspective on SPY. So let's move it along, and then we'll come back to SPY. Let's look at TNX here. See if there's anything we can take away. Well, it continues here. The 10-year continues to sell. Right, we did not hold this major breakout, and we were talking about that 43 basically had to hold, and it has not been able to hold. Sold off more, came down basically into our next area around this 41.50, 41.67. Tried to break under, then recaptured, hanging out. Friday, the 10-year was up about 2.8%, so fought back there with a nice little push, but we are still clearly downtrending here, trying to get over the daily 9 once again, but have not really recaptured that with any true conviction. But for me, it's all kind of meaningless. As long as we stay under 43, this could come back up. It doesn't mean anything. It just might well give us a good opportunity to go long in the market. If the 10-year ends up moving up, we'll have the 20 move down, maybe some nice confluence there. If we do get a push, we come right into the 20. This will move down, and we see something like this. We come into that, and then we come in, we look for the equal lows. Maybe we bounce here again. I'm not sure, but maybe we see something like that, and then, you know, we'll target here. And then from there, see a little move like this, bounce back up to here, and then we come down like that. So that could be a path that rates may take in the 10-year. excuse me. And so we want to watch out for something like that. But for me, the big pivot's going to be that 43, right? If we can start getting over that 43, 43.30, then we can start singing a little bit of tune for the TNX to actually change the trend. But until that happens, nothing. I would say that this is a overall a bullish indication for the market. Nothing to be worried about here. All right, let's go back in the dollar, because the dollar actually is kind of giving me a little bit of kind of one of the first potential warning signs of what's going on. And the dollar is definitely going to react to CPI. So take this with a grain of salt. With that being said, the main thing I was kind of talking about last week was seeing if the dollar could be, and I was actually tweeting about this, if the dollar could close the weekly. I think we were talking about this as well in the last video, but could the dollar close the weekly over this 104 area? And it did in fact do that. Is it a convincing close? No, I would say not by any stretch of the imagination. You can see here that from the weekly perspective, the 9 and 20 are right there, and we were watching to see if we can hold over this 104. We're going to be looking for a potential move up into that 104.50 area, but with the 9 and 20 here, we might not make it on the weekly. This is going to be pretty tough to get through. We might only come up to, and if we do, that's a big if it can hold still over 104, looking for a move maybe just into the 9 and 20, which is only going to be about 104.35. So not really that much of a move there, but we'll see with the data. We could just crash down very quickly here. But either way, we are still holding that area. So that's something that I want to be a little bit cognizant of and keep an eye on as things move along. Again, everything, of course, could change here, but we were watching as well. We were talking about this little inverted head and shoulders that was kind of taking place, right? And we pretty much have our neckline as we were already kind of going over at that 104, anywhere from that pretty much that 104 to like 104.20, right? That's going to be our neckline. If that breaks out, then we could see that move into the 50. Maybe we don't get there, but that would be where I would think we would potentially go. So keep an eye on the dollar over 104. I would say that could be something that we could look at as one of the first canary in the coal mines potentially. But yeah, I mean, after this week, we could come back and it could be back down towards the equal lows within a day. So, all right, let's move it along. What else did I want to take a look at here? I think, do we want to look at the RSP? And I think we can skip it. Let's go into some of our other data points that we like to look at here. Let's start off with the put call ratio and VIX. What's going on in this area here? Still just hanging out in the lower part of this balance range here. Not really doing much. Everything here just, the longer we hang out here, again, I'm looking at that potential basing type of situation coming on here. Volatility is right where the bulls really want it. And even again, we could go to 15, we could come up to 15.75, but until we get over that, that's going to be my major area that I care about. So coming up into there and then back testing and coming back down, that's fine. Nothing really to be concerned there. Overall put call ratio pretty much flat. No, it's not really skewed too much in either direction, so not too much data there for any potential contrarian type of thoughts. All right, let's look at our SPX 50R and 200R. How many stocks are trading above their 50 period simple moving average and 200 moving average, respectively? 50 pulled back a little bit here earlier in the week, but getting back up here. Nothing really too crazy here. Kind of could potentially be in a nice little consolidation for a move, so to speak, back up. We will watch it as we get a little bit more extreme. If we start to come and see readings in the 90%, that's 85% there. We might get a little bit more interesting for some potential contrarian signals. But as it stands, we're not quite there yet, but we'll keep an eye. Same thing here with the 200. We are in a interesting spot, not all the way up into the critical zone yet. So this is fine. This one obviously being tracking the 50 moves a bit slower. I am still watching though. Momo is starting to slow down a little bit on this after being extremely overbought in both scenarios. Starting to slow down a little bit. I will keep an eye on that potential canary in the coal mines, as this is very, very spicy. So I'm going to keep an eye because that is interesting to me. So I would say overall, bigger picture, yeah, sure, we're above 50%. No big deal. We're above 50%. Nothing to be worried about at all. Still above 74. We could even afford to come back into 74% here on the 50 and then bounce off from there and then try to make that move more into the extreme areas. That would be fine. But we could potentially see that showing these really spicy readings here on our Momo. So, do I want to go on and full call this a complete canary in the coal mine? No, for me, we would have to be seeing way more extreme levels for me to really get excited about this being a possible contrarian point of view. But I will say I'll give them like a half of a point each instead of a full point for our contrarian, because if we were seeing the extreme levels and we were up here on the Momo, okay, then that would be a full point for me. But just because we're not completely to the extreme levels, but we do have the weakness here coming in a little bit. Okay, so half a point each there for the bearish case of a potential contrarian point of view. But like I said, above 50% on both, doesn't matter. It can fall all at once. Well, if it starts getting below 50, then we can start talking. Okay, so let's take a look at the breadth though. Breadth is also looking a little bit interesting to me because we were talking about this divergence last week. Okay, and this is definitely one that I would give a see if we can pull it up here. If I can give a full point to, as far as a contrarian signal, right? So what's going on here with the market? All right, we'll pull up the SPY here. We have a higher high in SPY, right? But what do we have here on our breadth? It did not make our higher high. So we have a bearish divergence here, as we can see, right? We would think that these would be in sync, but they are not. Okay, so here I definitely think that this is one contrarian full point there for the new highs versus new lows to possibly say, hey, just be a little bit careful, right? These should not be out of sync. Okay. Okay. Let's move it right along. Let's go into, what else do we have? I think we got that. We did that. That's fine. Let's go into transports and look at the Dow. Now we're getting, here's another thing that I will give 1 point to a contrarian point of view. Now we were talking about in last week's video and the week before that, what would happen if price moved into this major structure retest right here on the transports, 1550.35 we'll call it. Couldn't break over, right? We came down. Now we came back here, we bounced, right? And we were talking about, let's see if it pulls back into the 15, we're going to call it 15 215 there. It did get a hammer candle. It tried to push up higher. The next day it tried to push but failed to continue up higher, right? Kind of came in here to the high on the 6th, couldn't make it over, and even I think it might have been even a little bit lower, while the Dow had made a new high. Okay, we're seeing a divergence here as well within transports and the Dow. We want to see these linked up. Bearish divergence here. Here's another check for the contrarian bearish potentiality. And when I say bearish, I more mean the potentiality of seeing a daily lower high or a weekly lower high. I'm not talking about anything more than that, right? So let's see what happens here with transports if they really start to get under that 15,215. That could be interesting, and I guess we'll really actually the area really to look is the lows from the 7th, and that's going to be basically 15,300, right? So keep an eye on that. If we start getting some daily closes on that, this is likely to start to break down, and that might further the divergence and be another warning sign for us. Yeah, as we know, data. So it's going to be a wild week. Anything could happen. Okay, I think that's everything I wanted to go over here from our other data points. So a couple of interesting things. No, I forgot. Let's look at our VIX internals here because we did have something interesting happen that we were talking about in the last video. Here, we're just hanging out still. Deep contango. I'm wondering how long this thing is going to stay like this because it's just very interesting to see it still down here. We do have futures rollover again this week, which is one thing I also forgot to mention. Quad witching as well on Friday. So Friday I'm taking off. I don't trade quad witching days. And so if you survive the gauntlet this week, pat yourself on the back and take a 3-day week because there's no point, in my opinion, to trade quad witching. For me, there's no edge, too choppy, and if you made it through after CPI and Powell, you deserve a day, an extra day off, right? So, yeah, so. I'll just say that. But the main thing, though, we were looking at the 9 versus the monthly VIX here, and we were talking about this coming into the zero line. I said this was one possible bearish indication here, or bearish or contrarian, I should say, reading that we were getting at the start of last week. And I said, well, let's see what happens if this starts to move into the zero line because it could just touch it and roll over. And that's what we did get here on the VIX. So this is actually went from something being a little bit more of a contrarian bearish point of view. If we started to get over that zero line, we did not. So I think that checks off as far as being, okay, that's not as worrisome. But I do want to say overall, what are we doing here? We are in an uptrend, right? So we had come up, right? We made a little bit of we came up, pulled back a little bit for a higher low, came up, made a higher high, higher low. Maybe we could look at it from that perspective and say, oh, well, maybe are we going to get, something like this, up, down, and then we get the move like that, okay? Something that could happen there. But either way, we didn't want to see, at least from the bullish perspective, that come over the zero line, and it didn't, so that's fine. VVIX still just down here. We were looking potentially about a potential inverted head and shoulders, maybe setting us up for something back down in this 80 area. Complacency 75 is really where they get really lazy, and that's really where you really see the true contrarian symbol if we start getting closer to that. But as it stands, not really too much to kind of worry about. We could make a case that this is the right shoulder area, the head, shoulder, right? But overall, we just have traded right in this like little range here and just hanging out. So this was looking a little bit more like a contrarian data set for us as it was coming up into the 90s, but all the way back down to 80. So I'm not really too concerned here. We'll see. We might get a little bounce here in this area, but all right, so let's keep it moving along and let's get into things a little bit more granular with SPY. And we're going to try to keep it quick because, again, so much can change this week, but the levels will not change. So we will go over that. Let's take a look at some of our balance zones here and see what we can take away. Now, okay, so the main thing that we will watch is to see if we can continue to hold over 459, right? Anything, if as long as we're holding over 459, 50 to 459, really no reason to think about too much. Now we were talking to the downside. Now we were talking about the potentiality of a fake break. So we're going to see what goes on here with this price action tomorrow, because if we do open up and we're underneath that 459, or maybe if we have weak internals and if we have weak internals and we're trading, oh son of a gun, and we're trading in here like so, it's possible that we end up just breaking down and coming back down into our half gap into that 458 area. And then if we do in fact break that, we'd be looking for lower prices to trade back down, basically another dollar down to 457, and 456.45 would be the next level to the downside. So for me personally, I would think that it'd be more likely that we would trade back into this range. But we may not. So either way, I'm just going to say that I'm going to follow that plan and say, okay, if we're still above this, I'm not really going to be looking for the short. Hopefully maybe we open up down here and things are looking okay. Maybe we can get one trade back up into Friday's highs, and then maybe we reject there. That brings us back into the range. We could just trade, pretty much like this. Try to break out, right? And if we hit a little bit of line here, maybe we try to break out again. So we could do something like this coming into tomorrow. So watch out for that. But so you might be able to catch a short at the top of the range, but just again, beware with this type of hesitation or consolidation price action that we might see fake breaks, right? Something like this, something like that, fake breakout, right? So be aware of that. But unless we get over Friday's highs, pretty much at that 461.75, that's what we're going to need to get over to really push us up higher. And if that's the case and we do get over that 461, okay, then we can start talking about 461.45 and 462 would be the next upside levels that I'd be taking a look at. So and if by whatever chance we do start to break below 456.45, 456, under that 455, and under that 453.75 and 453.40. So we shall see. But I'm going to wait. I'm going to see, what happens tomorrow. And we'll start to actually get all this kind of mapped out for us. I want a little bit more price data before we start mapping out really these higher prices with any sure certainty. But so let's see what we get. Either way, I think that's all I've got for you this week. Let's, again, be careful. Take it easy this week. There's nothing wrong with observing. Mind your sizing. And let's have a great week. So thank you so much for joining me. I really appreciate all the support from my listeners and followers. If you enjoyed the video, don't forget to smash that like button. And if you haven't already and you enjoyed the video, excuse me, a sub would be most appreciated. So of course, I got something stuck in my throat there right as I go in there. All right, guys. Well, that's all I've got. I hope you have a great trading week, and let's all be smart. Remember, plan your trade your plan. A prepared trader is a profitable trader. So let's do that. Follow our rules and have a great one. Okay, take care.